Well, hello, and thank you for joining us for our discussion about digital assets, regulation, and the journey to institutional adoption. I'm Perry Boring, the founder and president of the Chamber of Digital Commerce. We're the industry's leading trade association for the digital asset and blockchain industry. And as a nonprofit organization that's advocating for the acceptance and use of digital assets and blockchain technologies, our goal is help to develop an environment that fosters innovation, job creation, and investment. And we do this through engaging on regulatory issues and serving as advocates within the policy community. We currently represent over 220 companies and growing, including the Monex Group, who is a sponsor of today's event. And today I'm joined by two important voices in the crypto industry: Commissioner Hester Peirce of the U.S. Securities Exchange Commission, and Nathan McCauley, the co-founder and CEO of Anchorage. Commissioner Peirce, you really made a name for yourself as being one of the most knowledgeable regulators of cryptocurrency. I'll have you introduce yourself first in your own words for our audience. Could you just give us a high-level overview of your role at the SEC and the SEC's role with respect to digital assets?
Sure, Perry Ann, it's nice to be here. Thank you for moderating today's event. I'm excited to be part of it. My role at the SEC is I'm one of 5 commissioners. It's a commission-led agency, which means that we have a staff of about 4,500 people, and then we have the 5 commissioners at the top who vote on enforcement decisions and regulatory decisions. So because of that, I have to give my disclaimer, which is that my views represent my own views and not necessarily those of the SEC or my fellow commissioners. We're one of 2 federal regulators of the capital markets in the United States. And so in that capacity, we intersect with digital assets in a number of different ways. One area where our regulatory touch has been pretty strong is in the question of whether a digital asset is being offered and sold as a security. And there are also questions about investment products based on crypto underliers, so Bitcoin as an underlier for an exchange traded product, for example. And then another piece of our potential interaction is if entities that we regulate want to interact with digital assets, whether it's a broker-dealer, a trading venue, or an investment advisor trying to use digital assets to make up it, to be a part of the portfolio of one of its clients. Those are all areas in which we might interact with digital assets.
Thank you so much, Commissioner Peirce. Our second guest is Nathan McCauley. He's the co-founder and CEO of Anchorage. Nathan is a software engineer. He was an early employee at Square, where he helped build their infrastructure security platform. And he also holds 5 patents related to encryption and payments. Anchorage is one of the leading digital asset platforms for institutions. They're based in California. Nathan, would you please introduce us to Anchorage?
Sure. Thanks, Perry Ann, for the introduction, and Commissioner, it's a pleasure to be here with you on this panel. Anchorage is a digital asset platform for institutional investors and institutional infrastructure. So, kind of across the life cycle, across the spectrum of institutional counterparties, we are here to help enable businesses to build on top of crypto. Whether that's through our custodian platform directly for institutional investors, to increasingly our APIs that enable banks, broker-dealers, and institutional investors to build their businesses on top of crypto and blockchain technologies. We were honored to be the first federally chartered digital asset bank. Recently, we received that designation from the Office of the Comptroller of the Currency, the federal regulator for for banking in general here within the U.S. And we've been building out the infrastructure there, really encompassing the entire life cycle of digital asset ownership, from custody to compliance to legal and regulatory, and then up the stack to settlement and trading and lending. So really a full service platform, and we've been doing all we can to enable institutions to come into the space.
Thanks so much, Nathan. To get started, I'm going to ask for your views on the technology ecosystem overall. And the digital asset industry, it's evolving, it's maturing, and growing velociously. I would mark the inception of the industry at Bitcoin's launch, and that was about 12 years ago. And today, I would argue that digital assets have emerged as their own asset class. The total cryptocurrency market capitalization recently hit $2 trillion. Bitcoin accounts for about 50% of that. Nathan, maybe let's start with you. How are you seeing these new decentralized technologies like Bitcoin transforming traditional financial institutions and the markets?
Thanks. It's an interesting question, and it's funny to think of Bitcoin as being 12 years old, because that both feels very young and very old, depending on which aperture you're looking at the digital asset space. Right now, we are witnessing what seems to be a transformation in really the way that asset classes are viewed. So digital assets themselves are absolutely an asset class. There is Bitcoin, and then there's a whole host of other ones, from Ethereum to the DeFi platforms to increasingly the NFT NFT movement. And we likely over the next decade of digital assets are likely to see massive new trends that happen as well. And institutions are just now at kind of the initiation stages, starting to come in, starting to look at exactly how businesses can be built on top of this new technology. And there's a huge amount of new and innovative things to come. What we've seen so far is Bitcoin as a store of value, as a digital store of value, be kind of the first instantiation, the first real use case for blockchain technology. And that is already kind of taking the world by storm. A huge number of corporate treasuries starting to look in, banks starting to look to get in, and all kinds of different use cases. But that's really just the first one that we've seen. The explosion in the decentralized finance community also bodes well for the whole ecosystem, where there's a huge amount of innovation happening. Would love to talk more about that throughout the course of this panel. And then as we see institutions start to adopt this, looking through all the different use cases they need to understand, how to come in, how to build for the future. That's really where we see Anchorage getting a lot of adoption, and people that are looking at this and saying, "Hey, this is a technology that we need to build on, but we need to really build for the future and understand not just where it is now, but where it is growing, and make sure that we're building towards that." So a lot of great stuff going on, and really, really exciting time to be in the industry.
Can you just talk a little bit more about how traditional financial institutions and the digital asset space are evolving together?
Yeah, so a few themes that we're seeing there. The first one is we're in kind of the very early days of what I would call digitized securities. So digitized securities meaning taking a traditional equity, whether it's an equity, a bond, or a ownership of a company, and putting that on a blockchain in order for it to be able to trade 24/7, for it to be able to settle 24/7, and be able to build kind of a next generation infrastructure on top of that. We're seeing early movements in that space from a number of different parties. So that is a whole kind of thematic area, digitized securities. The other one that we're seeing be pretty interesting is this notion of digitized currency, whether that's dollars or other stable coins across the ecosystem. We're seeing a huge amount of innovation looking into how do we take traditional currencies and put them onto blockchains. And that could be kind of one-to-one reserved, where you see the stable coin market. You could see it algorithmic in some of the fully decentralized versions of it. And then increasingly looking at things like central bank digital currencies as a theme there. So the whole idea of getting dollars or currencies onto blockchains is a big theme. And then the third, I would say, is everything around world computer. World Computer meaning a decentralized computation platform where assets can be deployed, and everything around DeFi and decentralized applications are being built on top of these world computers, Ethereum being the most popular, but there will be several of them as well. So digitized securities, digitized currency, and then digitalized decentralized apps, all three big areas that should be of increasing focus over the next decade.
Yeah, Nathan, you mentioned Ethereum. That is the second largest cryptocurrency by market cap. And it can be akin to a software platform that uses smart contracts, and then developers can build on top of that. So Nathan mentioned a few applications that we're starting to really see a lot of innovation spur around, everything from decentralized finance to non-fungible tokens. But then there's other applications like supply chains and digital identities. Maybe Commissioner Peirce, we'll hit it over to you next. Ultimately, where do you see this going in the long run? Is blockchain technology going to play some kind of role in the global digital economy? Is this going to be a prevalent technology in our daily lives? Like, what is the big picture here?
Well, I think Nathan did a really nice job of laying out what the landscape looks like now. And from my perspective as a regulator, I hate to get in the business of predicting where the technology is going to go, because that certainly isn't my strong suit. But I do think that there is going to be change to the legacy financial system. Nathan talked about securities themselves being digitized. I think that is something that is going to happen over time. That has a lot of implications for the way that the securities markets work. And I think we're really in the early days of that. But I also think that a really interesting piece of this whole landscape is the idea of removing intermediaries and allowing people to interact with one another peer to peer. And that will be a pretty major change in the way a lot of financial transactions are done. But it's a powerful change in the sense that it offers us the opportunity to open the financial system to more participants, to have more people engaging and to give new avenues for people to engage. I think that centralized entities will still play an important role in the financial system, but some of the back end of what they're doing may be built on DeFi, for example. So you can imagine a system that still does have these intermediaries there for people who would rather deal with an intermediary, and for others who would rather go peer-to-peer. I think that will be an option. And then I think there's room for the new technology to play a role just in making some of the operational aspects of our existing financial system work more smoothly. And so there's promise there. But again, it is early. There's a lot of experimentation being done. I think Nathan mentioned the DeFi landscape, which has been one that there over the past year, there's been a lot of activity there. There's a lot of activity around stable coins now. And so as with many new things, we're going to see projects that succeed and projects that fail. But I think that's all part of the natural process toward figuring out, where does this work? Where does it make sense? And where might it not end up working?
Yeah, absolutely. We're going to see winners and losers. It is very early days. There's a lot of experimentation, and a lot's happened in just a short amount of time. In 2018, the Federal Reserve Bank of St. Louis issued a report saying that Bitcoin would emerge as its own asset class, and it has the potential to develop into an interesting investment and diversification instrument. I would argue that it has emerged to its own asset class for a number of reasons, but one, because we're seeing a lot of institutional demand for it as a store of value. So I'd like to talk a little bit more about institutional investors that are entering this space today. And Commissioner Peirce, maybe we can start with you. One of the reasons that institutional investors had in the past sat on the sidelines was because of a lack of regulatory clarity. Is this a hurdle that you feel has been overcome? what clarity do institutional investors have today to invest in digital assets or digital asset related products?
Well, I think more and more institutional investors are looking at digital assets as a potential asset class to invest in. I think people are really starting with Bitcoin, but there's interest in ETH as well. So I think that over time we'll see expanded interest. You mentioned the Federal Reserve Bank of St. Louis. They did a report this year on DeFi. So I guess if we look down the road, maybe decentralized finance is going to be more institutionalized in a few years. But I would answer your question about regulatory clarity and say, no, I think that there isn't enough regulatory clarity in the area. There's certainly more, and as more institutions step into the space, it means that there are service providers that grow up around that can address some of the needs that institutional investors have. They can't enter the space if they can't if they can't find someone who will help them with accounting, and if they can't find someone who will help them with custody, and those pieces of infrastructure are being built up. But the SEC, speaking of my own agency, we've been very slow to provide guidance, and that's unfortunate because I think it has meant that a lot of people, and I'm a little hesitant to say this with Nathan on the panel as well. I'm sure he'll want to hop in here. But there have been a lot of people who have been coming in and talking to us for quite a long time and wanting to be able to be more active in this space. But we're trying to figure out how does all of this mesh with our existing financial rules and financial structures. And those questions can sometimes be quite complicated, and it's further complicated by the fact that we have a self-regulatory organization called FINRA. It's a sort of quasi-self-regulatory organization that we oversee that also has a role to play with respect to broker-dealers. And so there are just a lot of pieces, a lot of regulators, and it has been quite difficult. I think with a new administration coming into the SEC, a new chairman coming in probably quite soon, and someone who brings with him a background in crypto, I expect that some of these regulatory clarity questions will get answered in the upcoming couple years.
Yeah, there's certainly a lot of work to do from the regulatory perspective, but we are seeing a huge surge in demand and a lot of pent-up demand for access to digital assets. And Nathan, your institution, you were really built to be a platform to serve the institutional client. You're on the front line of onboarding institutions into digital assets. Can you talk about what you're seeing from an adoption perspective? What kind of insights can you give us into your own pipeline?
Sure. Yeah, I think there's just a bunch to think about when you think about kind of regulatory clarity, institutional adoption, and kind of the whole almost think of it as an adoption curve for institutional investors. Inherently, with any institutional investor, whether it's a bank or an investment firm themselves, they're inherently on a risk curve and a risk appetite curve where they have to kind of look at, okay, what is clear, what is unclear, what is the amount of uncertainty that we're allowed to or functionally able to take on. And so there are many folks now that are getting to the point where they're saying, we are ready to take positions in cryptocurrency. We are ready to go long Bitcoin, long Ethereum, and buy and hold these assets. And then there are others that are saying, hey, we need more clarity, we need more understanding. I would say that our bank charter has been demonstrably helpful to serve a whole class of institutional investors, and that they've been able to look at the regulatory landscape and say, okay, well, if the federal regulator within America is saying, hey, that this bank is allowed to exist and is allowed to hold a Bitcoin, hold Ethereum, and do other kinds of activities, then there's almost no clearer signal that at least holding assets is okay. the question becomes, once it becomes time to build businesses on top of that. So when we start to look at other banks who themselves want to kind of follow in our footsteps and build their banking services on top of the assets that we have available within custody, the services that we have available, there comes a point when they ask the fundamental question, which is, how do you deal with the quote unquote uncertainty? You can answer every single question that they have, kind of provide a roadmap for everything, but at some level, there is still some level of uncertainty that comes with that. And that is almost an existential uncertainty, because the clearest signal is more people in the market doing this, more businesses being built in the market, more businesses in the industry kind of doing this, doing it well, having it work, almost aging like wine in a sense. And so I expect that over time, as this happens, it gets more and more normal, more and more folks will come in. I will say that one of the things that the US has been very good about in terms of building out a regulatory structure is to not be over prescriptive on any sort of technological point of view, or overdoing it in terms of exactly what this ought to be. Everything that's going on in DeFi and blockchain is really one of the really pretty special innovations that we see in the world today, and it would be easy to accidentally be over prescriptive in certain areas, whether it's over prescriptive in technology, over prescriptive in regulations, and so as much as sometimes we hope for more regulatory clarity isn't necessarily always what you're looking for, because you're also looking for the ability to innovate, the ability to grow with the industry and keep up with what's going on. So I would say that to the degree there are any regulators watching this, following the example of American regulators, there has been a good job of a good sense of being disciplined in what to regulate and what not to regulate. So that's been helpful. But in terms of our pipeline, specifically to the question about our pipeline, I would say that we have, especially right now in the bull market, we have almost overwhelming demand for our services, and that we have to be, unfortunately right now, we have to be selective in who we can even take on, because our business is scaling very, very quickly in terms of bringing on new banks, bringing on new institutional investors, and we are dealing with a lot of interest. So that's been very helpful, and it's really been kind of nice to be building for so long and really kind of see everything coming into fruition now. So lots more to come, but there's never really been a better time to be in a crypto business than kind of in early 2021.
Well, it's definitely been exciting to see the progress Anchorage has made. You guys are the first federally chartered crypto bank here in the United States. You're given conditional approval by the OCC. Can you just talk about what this banking charter means for the industry overall, and what types of problems that you're able to solve with this that were previously unworkable?
Sure. So there's a number of things that are helpful about our bank charter. Number one, the first and most significant to us is that within the U.S. there is actually from the SEC there is this notion of holding assets with what is called a qualified custodian, and a qualified custodian is kind of definitionally defined as a bank or a broker dealer, and so it's been very helpful to be able to operate as a bank. And make it unambiguously clear that we are able to function as a qualified custodian. It's also helpful that various market participants are again by statute supposed to hold their assets within a bank. Commissioner Peirce was talking earlier about broker dealers. Broker dealers themselves are supposed to hold their assets within a bank, and so it's been helpful to be able to function in that way. But then also, I would say just even outside of regulations, just the overall notion of what a bank provides is very helpful. People feel very comfortable, very safe with the level of rigor that they know that banks are held to in terms of acting in a fiduciary capacity, in terms of having independent board members that look at the business very closely. the regulatory structure that comes from being overseen in that way. There's almost a understanding that when there is a bank that's able to do this, it provides a certain level of comfort that is a safe thing to do. And a lot of the help for us has been around that. So I would say both specifically meeting the letter of regulations, but then also the spirit of what is going on there. Both of those have been really helpful to us. And then I'd also say that within our regulator, the OCC, I've seen an incredible amount of coming up to speed on what is going on with blockchain, what is going on with everything related to digital assets, and really understanding the markets. And that's also the case at the SEC as well, kind of institutionally focused on coming up to speed on everything that's going on here, and the up-leveling that has to happen within a regulatory agency in order to be able to meaningfully regulate a space. I think the SEC and the OCC have done an incredible job there, and that's been very, very helpful to see that they're kind of up to speed at the same level that we are in many cases.
Yeah, I think from our perspective at the chamber and in talking with many other companies that both have to work with the OCC and the SEC and other regulators in the United States, that we've gotten beyond kind of the initial conversations of what are digital assets and what is blockchain technology, to really be able to have sophisticated conversations about the technology, about business models, about the policy implications, about the different regulatory pieces that need to be thought through. So we've seen a huge increase in the level of knowledge from our policymakers here. And that is a big part of why we're seeing more companies be successful, because they're able to get through these necessary conversations and processes with the regulators. And of course, a regulatory strategy is a big part of any company that's engaging in this space, especially with regulated entities or institutional clients. You have to have a policy strategy. You also have to have, hard and strong technology. Just kind of focusing on the policy side for a second, and this will be for either one of you. How from a high level perspective, what is the history of crypto regulation in the US? Historically, how has the US approached digital assets?
Nathan, I'll let you go first. You probably know more of the history than I do. I popped in January 2018, so I'm a newcomer.
Sure. I mean, I can speak a little bit to it. The start of this kind of comes in well, I guess the history of the regulation of any particular asset class tends to be a function of where it came from. So if you look at, just as an example, if you look at the commodities trading things, the regulatory structure tends to be an outgrowth of what the asset class started as. So within the U.S., a lot of the regulatory structure started from the point of view of AML and OFAC, and kind of we have this global store of value. What are the initial use cases? How do we make sure that some of those initial use cases come in? And so it really started with a notion of what is the money laundering, what are the money laundering regulations that come in here? And then once we kind of got a framework going in that regard, from the anti-money laundering BSA kind of idea, then we kind of saw the IRS start to come in, looking at, okay, what is the regulatory situation around taxes for this asset class? And that's really where things stayed for quite some time, really up until 2017, once you really saw the first dramatic uptick in terms of institutional interest in crypto. That is where the SEC kind of started coming up to speed and saying, okay, people are investing in this. How do we bring this into 40 Act regime in terms of cryptocurrency, looking at what does it take for investment managers to get involved? What might it take to eventually get even a notion of what an ETF might look like. And then 2017 is also where you start to see more clarity, specifically from the CFTC, thinking of crypto as a commodity, and specifically Bitcoin as a commodity. And then a lot of things kind of flow out from that. You start to see, okay, what is the security status of this asset? What is the securities asset of any asset? And then moving forward, I think we're going to see more clarity about what it means to lend, additional clarity around IRS treatment, additional clarity around banking treatment. And so it's still kind of an ongoing story. Commissioner, this might be where you could take over and talk about where things are going, because that will be part of the history one day, but still lots to do there.
The United States is unusual in the number of regulators that we have in the financial space, both at the federal and the state level. And so it has really, I think, made this whole journey a lot more dramatic than it might be in other places that have a more streamlined financial regulatory structure. There's certainly benefits to our structure. It does allow for more experimentation, which we've seen with states like Wyoming taking quite progressive stands with respect to crypto. And even a city like Miami, which is really trying to attract innovation to that city, they're taking an approach that enables them to distinguish themselves. But on the federal level, it has been hard. I mean, I think Nathan laid out the history quite well. In 2017 is when the SEC first started taking enforcement actions in this area. That was before I joined the commission. Then in early 2018, so the first enforcement action was basically a warning shot saying we're looking at this area and we think a lot of this stuff falls within our space. And then since then, we've brought a series of enforcement actions based not only on fraud, but on the notion that some of these offerings should have been registered as securities offerings. And then another line has been the exchange traded product applications that have come in. People have been trying to build exchange traded products using a Bitcoin underlier. And that's something that we've been going back and forth with them on and saying, no, you're not providing us what we need to know in order to approve one of these products. I've taken a different view than my colleagues on that front. I think we've used a different standard with respect to exchange traded products built on crypto than we've applied to other types of exchange traded products. I actually think that has been a little bit of our attitude toward crypto all around, is that we take a different approach. When something involves crypto, it means it slows it down in the process of getting approved at the SEC. Some of that may change, but it does become harder to change once you've established a precedent of saying no all the time. It becomes harder to then say yes. And I think that's a challenge that we're facing in the United States now, because the market has gotten really big. And so the consequences of our decisions in this space now are a lot larger than they would have been earlier on if we had allowed some experimentation on a smaller scale. So that is a concern that I have going forward. But I think we will see more clarity coming. We'll see not only the enforcement side, but the regulatory side to match and catch up with the enforcement side, I hope. But there continue to be lots of difficult questions. There are questions about, anti-money laundering type things. Those kinds of rules are still developing. There's a lot of, I think, interest in seeing maybe some changes on the tax side, but that's all outside of my purview.
Thank you, Commissioner Peirce. On the anti-money laundering side, maybe we could just talk about that a little bit more. Last month, you gave a speech where you said that you think government officials should look at the other side of the argument. There's really been this very persistent perception that Bitcoin and cryptocurrencies are largely used for illicit activities. And of course, there's many governments around the world that are worried about criminals using cryptocurrency, but you've said that you think they should be worried about the opposite, and that cryptocurrency potentially can protect people from illicit activity. What did you mean by that? Can you share an example?
Well, I think that the interest in trying to stop criminal activity is a shared interest across all regulators, of course. But we also have to look at the promise of a technology that enables people to engage with the financial system without an intermediary. And so those are people perhaps who are, you can imagine a woman who is really in a very dangerous situation. Maybe she has an abusive spouse or something along those lines. She might be able to actually earn money, earn crypto, doing work on just, doing programming work, for example. And then she'll be able to take that with her, take her assets with her, and move about very easily and carry those assets with her. So that's one example. Or you can imagine a situation where there's a repressive government that's repressing a certain part of its population. And so having the ability to have this asset that's really easy to move around and have with you, a store of value that it's easy to transport, easy to move, I think is really a powerful thing that we should think about. And then I think another piece that regulators really do need to bear in mind is that there is a liberty interest. When two parties want to engage in a transaction that's mutually beneficial, we really need to take that particular concern, the liberty concern, seriously. Of course, it doesn't mean that we're looking the other way when it comes to criminal activity. But when it's just a mutually beneficial decision and it's not illicit activity, that should be okay to have that happen. And we shouldn't have to watch that happening as regulators. That shouldn't be something that we're watching and surveilling.
Yeah, that's certainly an interesting perspective and something that should be a part of the conversation, and that delicate balance between protecting consumers, protecting the financial system, and privacy considerations. Nathan, you guys are serving institutional crypto clients. Can you just talk a little bit about the types of measures that you have in place to ensure that you don't have criminals abusing your system? How are you making sure that you're protecting against things like money laundering, just so people can have an understanding of the robustness of the compliance programs underway at an institution like Anchorage?
Yeah, it's a I would say belt and suspenders approach, where we are looking at everything we possibly can, from early on looking at the anybody who onboards, who are they, what are at an individual level, all the individuals that onboard, and institutional monitoring of knowing your clients, knowing who is in them, all the way to transaction monitoring on a transaction by transaction basis. Where are they sending funds? Are they sending those to wallet addresses that might have been previously associated with illicit activity? Really, the kinds of controls that we're able to put in place, really in many cases actually go far beyond what is possible with traditional anti-money laundering kinds of goals, and that we're able to look very, very deeply at transaction history going back several hops, because it's all on the blockchain and it's all accessible from there. So kind of across the board, in many ways, looking with the regulator, we're looking at it saying, hey, this is actually quite a step beyond what was possible previously. And then there's also, I would say, within a lot of the protocols that are being built, protocols that we're integrating with and understanding, there's a level of transparency to the rules of the game that has been unmatched, really, within traditional finance. So the ability to look at some of the DeFi protocols and realize that the rules of the game are inherently fair and are inherently designed to be fair. Really, for many regulators, once you kind of look at that and see, like, oh, in terms of fair and orderly markets and building a fair system, it's really achieving the goal of what many regulators set out to do, but kind of doing that automatically, and there's almost as if there's no way to break the rules of the system. And so as we more and more provide opportunities to onboard to systems like that, there's really a good partnership that we're able to build with regulators to see that, hey, look, much of what their goals are for fair order markets, fair access to the finance system, are kind of enshrined as goals of crypto themselves. So to commissioner's point on the liberty interest there, I think there's a lot that's going on, and it's pretty interesting to see all of that develop and grow, and it'll be interesting to see how it all plays out over the next several years.
Yeah, Nathan, you certainly hit on an important point with compliance by using blockchains and applications like smart contracts. You can actually hard code in compliance obligations that can facilitate stronger compliance that is maybe not possible in some other systems or in traditional financial applications. So protecting innovations like smart contracts is definitely an important part of the conversation today with regulators, because they actually can be a very strong tool in protecting against these types of things. Well, Nathan and Commissioner Peirce, thank you so much for joining us today and sharing your thoughts. Really appreciate your insights and the work you guys are both doing in the public and the private sector as we're growing in this very interesting and important space of digital assets and blockchain technologies. Thanks
so much.
Thanks so much. It was a pleasure.